I just spent $10,000 recently on dividend stocks. You're probably asking, yo, how did you get that money? I sold my BMW because everybody is gambling and concentrated over here, and nobody's even looking at the gold bars that are on the ground. There is briefcases of cash just on the ground that I'm just picking up. I'm Larry of the No Regret Show. Let me explain to you why Gary Gensler is a genius for leaving the SEC. People are going to get baby oiled. Let me break this down to you on what's going to happen. We've actually seen this before. There was actually a Gary Gensler in the late 90s and early 2000s, and he was warning people back then. Let me show you what I'm talking about.
Tonight's Moneyline Movers cash flow up 102 3/8 in its stock market debut. The networking equipment maker enjoyed one of the best opening days ever. The stock trading at 5 times its offering price.
Cash flow was a huge hit. And theirs remains one of the top 10 biggest first-day pops of all time.
Akamai is Hawaiian for cool, but investors...
Hot IPOs became a staple of the technology telethon.
Shares of the web technology company soared more than 450%. The stock that stole the show today is called Free Market.
The pops gave the companies publicity, but not much more.
Came public today, selling shares to the public, and take a look at what this stock did, up 482% or so.
If the investment banks had been doing their job the way they were supposed to be doing, if they really had the best interest of the companies at heart, you would have never seen the situation where stocks or IPOs go up 2, 3, 400% on the first day. I mean, that is a crime.
Priceline.com is the latest beneficiary of the internet stock craze. Shares of the internet commerce company debuted at $16. They closed at $69, a rise of over 330%.
The famous case is the Globe.com, which I believe went up over 500% on the first day. And it was like, oh my God, look at that, look at that.
Earth Web was up 379%, and the Globe.com, which only traded one day, gained 606% on the week.
What is the reason you have an IPO? It's to put money in the coffers of the company. That's the reason you do it. When you have a situation where it's going up 300% on the first day, that's 300% that the company is not getting.
The Amazon.com of drugstores went public today in the latest smashing net debut. Drugstore.com nearly tripled in price.
Individual investors did not benefit much from these big pops either. That's because almost all of the IPO shares had already been allocated to big mutual and hedge fund investors.
A culture of gamesmanship has taken root in the financial community, making it difficult to tell salesmanship from honest advice.
Chairman of the Securities and Exchange Commission, Arthur Levitt, made stock analysts and television a major focus of his public statements.
A lot of analysts that we see on television recommending stocks work for firms that have business relationships with the same companies that the analysts cover. And some of these analysts' paychecks are typically tied to the performance of their employers. One can only imagine how unpopular an analyst would be who downgrades his firm's best client.
At one point, Levitt sent an SEC staffer to talk to the producers of the major money shows about the issue of analyst recommendations.
The networks in general felt that they had no responsibility in terms of monitoring the guests that appeared on their programs. And my feeling was that the analysts who came on those shows and promoted certain stocks that represented companies involving investment banking clients for their employers had a responsibility to clearly reveal that on camera. I still feel that way. I still feel that the kind of disclosure we're getting from analysts in both print and electronic media is incomplete.
Yeah, he was warning people about .com, pretty much about internet stocks. The same players back then, look who was up there back then during year 2000 touting his technology company. And he got fined for fraud. Yeah, 25 years later, now he's a crypto company. You see, ladies and gentlemen, the bad actors, they stick around. People really don't understand why Gary Gensler's smart. He's going to step away in 10 years. We don't know what's going to happen. Something's going to happen, but I can guarantee you He's going to write a memoir saying, I told you so. Gary Gensler is a smart man. He has an MBA. He's written books in the past. He's gone to prestigious schools. He's smarter than me, okay? Let me break down why I invested $10,000 and how you can literally change your future with other people's stupidity. You see, a lot of people, they don't understand that they're partying on the beach. They're playing volleyball. They out there chilling. They drinking. They hanging out on the beach, right? But below the ocean, an earthquake is happening. Something is, it's rattling under there. And then eventually a tsunami. They look out and they go, where's all the water? And guess what? There's a tsunami headed their way. It's too late. So they start selling out of everything. Let me explain how this happens. What happens is nobody's looking for profit. Nobody's really looking for profit in a lot of these crypto miners, these crypto companies. They're caught up in the euphoria. And other people right now are like, you know what? Something doesn't feel right because you want profits. You want profits. You want to invest in a company that is profitable because eventually when the economy takes a downturn, people sell out of those speculative companies first, and then they just start selling everything. And then that's when the great buying opportunity comes in. You see, here's what happens. People stop consuming. There's already videos out here of cars being on car lots for hundreds of days. People are realizing they can keep their cell phone longer. People are actually sharing food more. They're not getting full dinners. They're sharing appetizers. People are starting to realize that their pockets are getting tapped. Okay. So what happens is consumers stop consuming, businesses start losing money, and then the profitable business, your real legit profitable businesses start reporting, we're not growing anymore. The economy's in a downturn. And then you know what happens? One day you wake up and the stock market's down 5%, 6%. Oh, those scammy insiders and those scammy stock people, they sold out. They sold out while the stock market was closed. They called their boys, get rid of this. And guess what? You're there holding the bag 6-10% before the market even opened. Then you panic sell all your speculative stuff, your index funds. You start cashing out of stuff because you don't have any cash on hand. People are taking their 401ks, withdrawing it, leveraging it into Bitcoin because Bitcoin and crypto and MicroStrategy only goes up until it doesn't. What happens is people start cashing out of great index funds, companies. They don't know what to hold on to because they think it's the end all be all. Then people like me come along, I'm kicking leaves over in the park because everyone's over there with their shovels digging for crypto and gold and stuff. And I'm literally picking up briefcases of cash and gold bars and diamonds. I'm all by myself over here with a few other people. Warren Buffett is actually holding on to a lot of cash. Is it because he's stupid or he's seen this before? My man is almost 100 years old. He was taught by Ben Graham on what to look for. Ben Graham, the intelligent investor, teaches you what to look for. While everyone's being sheep going this way to be sheared, you be a diamond in the rough, you be a lion and you go this way, you're going to find food. I invested $10,000 in my dividend fund portfolio. The dog's playing over there. I invested $10,000. Buying companies that nobody's even looking at. It's not popular. They're boring. They're not sexy. The news isn't talking about them. YouTube isn't talking about them. I threw $10,000 into 2 stocks because I got the cash from selling my BMW. Now I'm going to hold on to the rest of that cash for another buying opportunity. Don't just automatically start selling stocks, okay? There's things around your house that you can get rid of. You got stuff in your attic, your basement, your closet. You can downsize that car just to have an emergency fund to protect yourself when you get laid off. Because when businesses start reporting profit losses, they start laying people off to try to balance their books. They start getting rid of pensions. They start laying people off. Usually workers are the first ones to go. So what you can do is start selling stuff around your house. The IRS will not know. You can give yourself an emergency fund, or you can give yourself a buying opportunity for when markets come down, because people are going to be selling great companies. They're going to be selling S&P 500s. They're going to be selling total stock markets. They're going to be selling companies that have been around 100 years because they're just getting rid of stuff because they don't know what to keep because they never educated themselves that a lot of your great companies will come back. And if you want to position yourself to buy these crypto miners or these cryptos, make them prove themselves. Like Apple crashed, Microsoft crashed, Amazon crashed during the .com, but they came back because they actually had a wonderful business model. If you want to buy those companies and you want to buy those cryptos, wait until there's a huge pullback. And if you're up 200%, 300%, you might want to think about maybe taking some profits, because at the end of the day, I mean, how long can stocks go up? How long can stocks go up before there's a huge pullback? Some of us make our lives better because we have the ability to listen when someone is talking to us. So hope this video helps. Dividend portfolio link will be in the description. We're buying great companies over there that nobody's even talking about. People are stepping over $100 bills to pick up invisible currencies. No regrets. Get it.